all the viewers. Joining us on the show today is Sharmila Joshi to discuss the movers and shakers in trade and stocks which are on the move. Good to be on the radar as well. I am Hiral Dadia. Welcome to the show, Sharmila, and a very good morning. Sharmila, let's start with the IT sector. I know there is no news in that sector, but overall, something which is at bay up and about in trade today, you have almost four stocks from the top five Nifty gainers, which are from the IT pack. What do you make of it? Do you see opportunities over there? And why do you think, the stocks are buzzing?
I just have two or three things to say. Honestly, I don't know why the stocks are buzzing. Maybe we are taking some cue from the fact that things in US are now sort of falling into place, and maybe you're not expecting too many interest rate hikes, etc. But I think two, three things are important to note here. One is that if you look at where market was last week, I mean, we've corrected over the last 2 or 3 days, but when you were very close to the all-time high, when you were at 18,400 Nifty level. And you compared, I remember seeing an interesting chart shared on Twitter, which showed which were the stocks which led the way, at the earlier high and what is on top now. And you would find that in what is on top now, there's not a single IT stocks. So that pretty much tells you, what the story has been over the last 1.5 years, where IT has underperformed, and perhaps we would have been at all-time highs already if it hadn't been for the fact that IT has had such a disappointing last couple of quarters. And I think even if you look at the numbers and you do a drill down, you'll find that other than Infosys, which reported terrible numbers, even the other large cap ITs, whether it was a TCS, HCL, numbers were okay. And in fact, the mid caps had a really good quarter this time round. So perhaps, there you've seen a lot of buying, and I think, that's justified. Stocks like Birla, Soft, etc., which for a very long time we weren't seeing decent numbers, or Zensar. So there are a lot of mid-cap names which have delivered good numbers, and I think, that could possibly be one of the reasons why you are seeing, a persistent at good numbers. So, there have been a host of stocks where mid-cap stocks and numbers have been good, and perhaps that's one of the reasons contributing to overall buying in IT.
As to where the IT space goes, another sector which is in focus are the AMCs, and AMCs are under pressure, and this is after the SEBI has proposed a uniform total expense ratio for mutual funds. Firstly, what would this actually mean for AMCs according to you, and how do you think an investor should play the AMC space?
So obviously, I think not good news for AMCs for various reasons. One is, as we understand from what SEBI has shared, apart from the total expense ratio, you are being charged, other charges, which is in itself sort of strange, because if you're saying total expense ratio and then you are adding 3 or 4 other charges, I think, logically it makes sense that everything should be included, and that will definitely bring about transparency, but it might mean a lower expense, meaning, because total expense ratio is what the mutual fund gets at the end of the day. So, you could see that shrinking. Then there is also a suggestion that perhaps this could be performance linked, which I don't know how that's going to work. But I think even if they can get working on the total expense ratio, as they've been saying, and include those charges, it's not great news for AMCs, but it's good news for people who invest in mutual funds. And perhaps it was, this kind of move was, I think it's been a little overdue. So I think it's a good move overall.
Right. So a good move overall that's coming in terms of AMC. So do you think this would be a right time to look at AMCs from an investment perspective?
Yes, I think let the stocks correct and then take a call, because, I think obviously where you are seeing an increase, I mean, we have to keep this thing at the back of when you make these kind of decisions, that where we are in terms of what our population size is, the number of demat accounts, the number of people investing in mutual funds, and then if you look at it from a longer term trajectory, that is a number that is bound to increase over a period of time. So we got a big bump up because of COVID, and we saw the number of demat accounts go up, etc. But very honestly, if you look at it as a percentage of the population, it's way off. But it may not be fair, according to me, to be looking at it from a purely total population sort of a perspective, because you also need to look at perhaps which could be the the subsection within that which could look to invest in mutual fund products and which understand what that is. So I think this move is also from, if you read between the lines, they're also trying to give a little leeway if you're selling products to tier 3 cities, and they are like aiming for financial inclusion. So I think you need to keep that in the back of your mind and look at it from as a long-term game when you invest in an AMC stock.
Right, so that's with regards to where AMCs go. Now let's move to companies that are reacting to earnings, right? Gland Pharma, that's an interesting one. Clearly, if you go to see, the stock is stumbled, profits are down around 72%, and analysts have downgraded the counter as well. What do you recommend?
Well, I think obviously, the results were, as you said, like a really a howler, if I can use the word. And what made it worse was they had some client declaring bankruptcy and another shifting to another player and one production line being shut down. And very honestly, for Gland Pharma, it's been one accident after another. And this coming at a time when you're overall seeing concern in the pharma space. In fact, I think, perhaps about a month and a half earlier, we were beginning to think that maybe things are bottoming out and things might look better for pharma. So my suggestion would be to stay with stocks that are showing that, sort of improvement in numbers rather than going with a Gland Pharma. So I would really avoid the stock, I think.
Moving on, you have Nazara, which is in focus in today's day of trade. And you have one of their subsidiaries, which is Nodwin Gaming, who's gone ahead and raised around $28 million from new and existing investors. What does this mean for a Nazara, number one? And what would you advise an existing investor to do?
So I think it's good news for the company. Definitely, I think that what I could read is that they are going to really use it to sort of improve their ecosystem, which is great news. I think my only concern with Nazara and stocks like that, like maybe even a Delta Corp, which is getting into sort of online gaming, etc., is that government policies seem to keep fluctuating. But if they were to say maybe stay consistent for a while in the approach they have to that, then I think it would help us better make like a better informed decision on whether to invest. So it's a space that I like tremendously, and I think it has tremendous potential. But this is a risk that you need to keep at the back of your mind before you invest. And I think the development that happened, that money that they've been able to raise, if they're really able to use it the way they have said to improve an ecosystem, IP, etc., then I think it's very good news for the company.
That's with regards to when Nazara goes. You have Thomas Cook as well, which reported numbers. And overall, if you see in terms of Thomas Cook, the stock was trading under pressure, down almost around 5 to 5.5%. What do you make of this?
So, I think there is trouble in that space because, honestly, if you're looking at overseas travel, there have been a couple of roadblocks. One has obviously been, you've been hearing from a lot of people the kind of delays that there are in getting visas. So first, I think it was just US visas, and people were getting bumped off to appointments 4 or 5 years later, sort of a thing. But even a lot of Schengen countries, etc., visas have been difficult to get, and there are many consulates which keep your passport for over a month, etc. So I think that has sort of that has skewed the picture a little bit as far as overseas travel is concerned. And I think increasingly over the last couple of days, the kind of debate that you are hearing on TCS, that 20% TCS on, when you use your credit card overseas or if you make any payment overseas for any overseas products using your credit card, that I think is, it has been a bit of a dampener. Though I think, that is some time away in being implemented. But, poor numbers, visa delays, these kind of concerns. So I think it's best to avoid the stock for now.
Right, so best to avoid the stock in terms of where Thomas Cook goes. Sharmila, how are you looking at it? Looking at a Ramco Cements as well. With regards to Ramco Cements, if you go to see a 5% up move that's come in on the counter, in the last 1 year as well, 18 to 19% is the kind of growth that we've seen. And overall, it's the cement pack taking into consideration the infrastructure play is in focus. A 23% rise is what we've seen in terms of profitability. What's the trajectory according to you looking like?
Good. I think this is a space that I like, and yes, I think Ramco system numbers were strong on a whole host of parameters. You've seen the numbers. I think the numbers speak for themselves. They were a good set of numbers, and I think more importantly, what you refer to as in overall the expectation from infrastructure play. Yes, I think traditionally monsoon used to be perceived as a season where you used to see a little less demand for cement, but now that has changed because different companies are catering to different geographies, and honestly, this has been a cycle that has which for many years has sort of gotten delayed. First, due to the fact that nobody was really going in for any kind of capex or government spending was low, etc. during COVID years, and now everything has turned, and you're seeing the pickup in all of these. So honestly, not just Ramco Systems, but I would be positive on the space as a whole. And Ramco Systems in particular, I think a good set of numbers. My targets would be closer to 900 rupees.
Right, so a target of 900 is what we should be watching out for in terms of Ramco Cements. Rights is an interesting one as well. Now, clearly, a marginal dip that has come in terms of profitability, a 60% dividend is what Rights has announced as well. What do you make of a Rights?
So I think obviously the 60% dividend is very attractive. And yes, numbers were a tad disappointing, I would say. But overall, I think the way the railway sector is poised, and the kind of news that you get to hear on the kind of orders that they've been giving for whether it's for wagons, whatever. I think retail. No, I'm sorry, we're talking of rice, but that's also railway. Yeah, so I think it's a very decent stock, and if you have it, I think you can continue to hold.
Right. Moving on, a PNB housing finance has been in focus. Now, clearly, if you go to see, we've seen a 64% increase in terms of the interest income. In terms of the profitability as well. The NI has gone up by around 27%. From a housing finance perspective, now there is some bit of a demand supply mismatch that we're seeing in terms of real estate, right? Demand is low. Supply is less, demand is more. That's what majority of the real estate players are alluding to. What would you advise someone to do with the PNB housing finance, taking into consideration the stock is down around 4% today, but in the last 5 days as well, it's been pretty volatile.
Well, the numbers look good, and I think from a valuation perspective, also the stock seems fine. I think the trouble probably is that yes, I think real estate numbers. There's a strange dichotomy there because if you see DLF, numbers were excellent, but that was also because their premium offerings did very well, and maybe somebody who goes for that may not be a customer of like a LIC housing or a PNB housing. They may go to some of the larger banks to finance their loans. So, it's. I don't think it's correct to say that PNB housing will do well because you had decent numbers, because you have to look at the kind of geography that they cater to. But I think specifically for PNB housing, the numbers were good and valuation seemed decent. So yes, I think this is a stock that I like.
Right. So a positive view coming in as well in terms of PNB housing finance. A lot of movers and shakers. Sharmila, thank you so much for giving your views as well on all these counters. But clearly, if you see in terms of where markets glow, the advanced decline ratio pretty much in favor of the declines. We are almost near the day's lowest levels, but has recovered. We hit a low of around 18,060. But from there, we've seen an up move of around 45 points that has come in, and we're trading above those 18,100 levels right now. As we mentioned, it's the IT names which are giving it a thumbs up. Britannia under pressure, JSW Steel, Indocent, as well as the Tata Consumers, which is trading under pressure, whereas Bank Nifty is clearly underperforming the benchmark indices in trade today, unlike yesterday, with cuts of around 0.3%. And we are below the 43,650 mark already in terms of Bank Nifty as well. This is a start to the new weekly series as well. So, where it moves from here on is going to be an interesting one to watch out for. That's all that we have on this edition. Thanks for watching. Thanks.